we also have Jon Hilsenrath. Jon Hilsenrath, you were in the room. Let me get to you first.
Right.
And
Okay.
you asked an interesting question, one of, I believe, after you, 4 other questions about how the Fed appears to be looking rather political and holding its fire in advance of the election. Now, what jumped out at you here with Janet Yellen?
Well, I mean, she certainly got a lot of questions about politics today, and I think that's inevitable because we have an election coming up. And Donald Trump, the Republican nominee, has politicized the Fed by calling out Janet Yellen and saying that she is trying to support the Obama administration with low interest rates. I asked her to respond to that. She said emphatically that the Fed doesn't even talk about politics at its meetings. And she also said that the Fed... you know, I think these are very technocratic individuals. I think they try to filter out politics as much as they can. But the second part of her answer I'm a little dubious about. I asked her if the November meeting that's coming up is a live meeting for the Fed, if they would actually raise interest rates the week before an election. She said it's a live meeting. I kind of doubt that. I think that they want to stay as far away from doing anything around this election as they can, and that November is going to come and go with no Fed action.
John, I know they're in a tough position, but it is really beginning to look like the excuses are constantly coming. And I want to play something because this jumped out at me, and I know a lot of other people. She explained, she even asked herself, why should we not hike this time around? So that was an interesting exchange where she asked the question everybody was thinking, and then she gave a really bizarre answer. Let's listen.
So why didn't we raise the federal funds rate at today's meeting? With labor market slack being taken up at a somewhat slower pace than in previous years, scope for some further improvement in the labor market remaining, and inflation continuing to run below our 2% target, we chose to wait for further evidence of continued progress toward our objectives.
It's the old labor market slack is being taken up a little more slow. That was the first time I had heard that one. I mean, it almost sounded like a convoluted version of disinflation, which gets so wonky. But, you know, I'll give it props to Steve Leisman. He had said, you keep moving the goalposts.
Well, so, you know, what she's trying to argue there is basically it's very simple. The unemployment rate hasn't moved this year. It's been stuck right around 5%,
which
a little
is
bit
low,
below
though.
that. And it's low, but it's not moving lower. And her argument is that this economy still has some room to run because the unemployment rate isn't coming down, because workers are coming in from the sidelines and filling these jobs that are opening up. They think the economy has room to run. And that's her argument for why they're not moving right now.
Again, the markets love this. In fact, we just hit Dow session highs, and the NASDAQ hit a lifetime high. I want to get to Lori Rothman. You're on the floor of the New York Stock Exchange. What are you seeing? What are you hearing?
All right. So first of all, the NASDAQ hit a record here a few moments ago. And, you know, it's interesting. It was a real upbeat press conference. Markets absolutely loved what Fed Chief Janet Yellen had to say. And what I thought was kind of telling, you know, you showed the price of gold, biggest move in gold. You know, of all the asset classes we watch, we want to see what the reaction is. We saw interest rates come down and gold really spiked, and that stood out to me because Yellen said that inflation, she expects a 2% target over the next 2 to 3 years, and that if, you know, there's, and I think you hit on this too, Liz, there's a risk of not raising rates in enough time. So, you know, it's just really, really telling, you know, to see that this interest rate forecast, if you look at the Fed funds futures predicting the December rate, you know, you had the discussion with John about the Fed not being politicized yet. You know, no one is looking at November, but December before the end of the year, likely to see some tightening. And of course, you have to work in the Bank of Japan and what it did with its interest rate strategy, keeping its benchmark 10-year yield at 0, which currently is at negative rates. So there's just really a lot of rate management going on and talking to get the markets to come to the exact place, that sort of Goldilocks place, if you will, so that the Fed can proceed and manage the economy the way it, however you want to interpret it, sees best.